Gold last week tried to give a breakout below the critical support levels at 1940 but failed to stay below 1940 levels and have seen a very good recovery and closed the week at around 1958 levels. Yes, lower highs are seen, lower lows are seen. What does this mean? What can we expect from gold next week? Which position you should take in order to profit trading gold next week? We will see with the help of charts followed with indicators. Towards the end, I will give you the summary and the trading levels and strategy for you to adopt and profit next week. Do watch till the end and do not forget to like, share, subscribe and comment. Do not forget to press the bell icon which keeps you updated with the twice a day analysis for gold which I share every day. Yes, you can also remain updated by joining our free Telegram channel. The link is mentioned in the channel and video description. Let's start. First, charts alone followed with indicators. Now, see on the weekly charts, couple of observations here. Lower highs, lower lows, trading in this bearish channel. This is a sideways movement here, you can see. And now if you look at the complete move, couple of observations here. See, lower highs are seen and hence yes, 1970-71 levels if you see gold trading above, and then specifically 1985 levels. If these two levels are taken, you can say gold is bound for a reversal next week and it is definitely going to hit 2000 levels. So this is first point. It has to come out, it has to give a breakout out of this channel, lower highs and lower lows. Second point here to observe is that the candle closed in red and hence where it opens it is going to be of importance, because see, if it opens above 1960 levels, 1962.5 levels, then you can expect that there could be a little rise. Now how far that can stretch, I will wait for it to break past this zone at 1972 levels, and if this is taken, then certainly you can say that it is trying to give a breakout. We will see 1985 and then beyond that even 2000 levels can be expected. But the point to note here is, see, last couple of weeks we had the consolidation, we had seen the consolidation in gold with couple of green candles. However, the previous candle was lower highs, higher lows, consolidation here. But most importantly, that it has given a breakout last week. So what does this signify? Certainly it has eaten away the stop losses which were most of the traders would have expected 1940 to be respected, but this time it is breached and in fact has gone close to 1925 levels. And hence where it opens and which direction it continues, that is going to be important for us. If it stays below 1954 next week, you can stay short, wait for 1940 to be breached, and below that it is going to continue with the bearish movement. So we have got here a couple of key levels, that is 1954, 1962.5. Now another point to note on the large term is it has created the bottom here. Since then we can see a rise. You can see this, it has created this channel. Also if you look at it has created this channel. Now most important point is it has seen the bottom of the channel here and it is trying to recover. That is the most important point, because see, it is still trading in this bullish channel which it is not willing to break past by, because if it breaks below this channel it has to go there is lot much of distance to cover on the downside. At least 1870, 1840, 1800 can be expected if it breaks down below this channel. Right now it is very much respecting the you can see this couple of times. This is the time it tried to give a breakout, this is the time it tried to give a breakout, and failing to sustain below, it has seen a very good recovery and hence it is still trading within the bullish channel. That is very clear. Now where to consider a breakout for gold? Yes, once again 1940 levels below which you can expect that gold is going to give you a good sharp drop. Till then do not consider this as bearish. At the same time, as we saw, there is a possibility of a recovery and a breakout, and how far it can stretch, that is something you should watch out for. Now let's have a look at the daily. On the daily charts, one point is, see, 1940, how many candles got the support at 1940? You can see this very strong support exists at 1940 levels. At the same time, lower highs are seen consistently. Now it tried to give a breakout but has shown a sharper recovery there. Hence, it is still trading in this triangular squeeze here. It has to break out beyond 1970-72 levels such that more bullishness can prevail, which might take it till towards 1985 and then 2000 levels. Till the time it stays below 1985, we will still not consider this as bullish. That is clear. Another point to note here on the daily chart, see, previous to previous candle, you can see a long tail and a good green body there on upside. Also, second point, 1960 was the resistance, it tried to breach. The third point is, see, the candle closed in red. However, this is a candle of indecision, and hence once you see it trading above 1962, you can still expect 1970 levels. 1967 to 70 zone is what I will look forward to. Very, very, very good resistance in between this, and beyond that 1985 levels to come into picture. And as we discussed, 1940 is the level on the downside below which more bearishness to prevail. Also on the daily charts, if you look at, it's still very much within the channel. You can see this. See, rise, retracement, rise, consolidation, rise, retracement, rise, retracement. So it is almost hit the bottom. This is the third wave here, and a recovery from here is going to be strong enough. So we have to be watchful. Also remember one more point on the week. See here, it has seen the triple top almost. It tried to breach out, and if you look at the formation, if you consider this, it was trying to trade in this bearish or flag formation here, and hence it has given a breakout which might continue to sustain. Now coming to the on the monthly chart, see you can see previous two candles getting the support precisely and beautifully are aligned here. Yes, it has gold has still got the support intact at 19, 20, 19, 15 zone. Very, very good support here. Also remember one more, that the previous candle was a good swing candle where we have seen higher highs and lower lows, and there is a possibility that it can give you symmetrical candle here. It can continue to rise, and also this makes this zone at 1967.72 as important. Beyond that, we may see it trading in green, and then the closer of the month with a greener candle, and a closer of month at around 1990 levels can be expected. Also right now, if you look at, see, lower lows are already, and gold is still shying away from breaking on the downside, so hence it may give a pullback. We have to watch out for certain. We have to wait and watch out how it behaves. Why? Because see, the base here was created in the pre three you can see these three candles. Very strong base was created 1800. Since then higher highs are done. It is trying to retrace, and from here also it can continue with the breakout on the upside. There is a strong probability for it. Now let's have a look with the help of indicators. What are the indicators are suggesting? Because see, indicator has to be aligned with the movement. If you look at the exponential moving average trading with divergence, trading bullish, still there is lot much of bullishness. Yes, the prices here you can see diverge from the moving average, now also are diverging from the moving averages. Right now the moving averages have started to look upwards, and hence we have to wait a little. Even if it tries to drop, here is the maximum support at 1840, 1850 levels. Yes, the prices are still not very far from the moving average, and hence it can continue to diverge more before coming to back to the stock 20 period average levels. Stochastic, which was overbought, has dropped on the monthly chart. The MACD on the monthly chart, see, after this good sharp drop, it has started to diverge, trading in green. The candle size have almost flattened, but still there is lot much of room on the upside. You can see this crossover has happened after a long duration, and hence it has to sustain for. If you look at the RSI is also retraced a bit, now trading comfortable, neither overbought nor oversold. Now coming to the weekly. On the weekly charts, see, this was the crossover. Since then gold has been trading bullish. Now it is almost flattened. The moving averages are still bullish and have almost flattened. It is not yet crossed over. It is not yet started to curve downwards. It is still trading very much bullish. Second is the 20 period moving average is still giving it a very good support, which is situated at around 1940 level. Also, this is the median of the Bollinger Bands. So that is the point, because below which 1870 levels should be achieved, which is 50 period moving average. The stochastic on the weekly charts have hit oversold levels, and it can try to recover. See, this was the drop here, it has seen the recovery. This was the drop here, it may see the recovery here. Now look at MACD on the weekly chart. This is one point where one has to be observant here, because see, this crossover is happening after a long bullish move, and it has started to diverge. It has started to trade bearish, but it does not mean that it cannot scale to the new highs. If it crosses over and continue, it can scale to the new highs also, very much possible. Right now it is divergent, it is bearish. Increasing body size is what we can see, and I will wait for it to converge a bullish candle next week, a breakout next week, and the convergence here, it is the beginning of the bull run for gold. So I will definitely watch out for next week how it behaves. Right now it is the only thing which is giving an indication that it is going to stay bearish. RSI almost comfortable, neither bullish nor bearish. And coming to the day, now see, on the daily chart, the moving averages traded with divergence, the 20 period exponential moving average. This is a bearish sign. Also remember, the price is diverged here from the moving average. It has converged here. Also you can see this is the zone where it is getting the maximum resistance here, that is 1960 1970 levels, and hence it has to stay above this zone. The gold has to give a breakout above this zone. then the moving average might converge, and this should be the beginning of the bull run. Remember, till here we had discussed that the prices were divergent from the moving average. There should be convergence. Now it has converged enough. It has come to the bottom. It has come till towards the 100 period moving average. So the possibility for it to converge crossover again for a buy entry exists. What has happened here is can be replicated. See double bottom and then this reversal. So this can also replicate. We have to just be observant and watchful. Stochastic has seen a little rise after almost dropping a bit. But look at MACD on the daily charts. This is crossed over at bottom, trading with little divergence, trading bullish, looking upwards. Also remember this crossover is happening at a good lower levels, and hence it can continue. It does not mean that it cannot cross over on the downside. See, these are markets, anything and everything is possible, but right now the chances of it to rise exist more, and it can continue with the bullish momentum here. So now also RSI has started to look upwards, trying to indicate slight bullishness. So we have now seen the charts, we have seen the indicators. Time for me to define the trading levels and strategy for you for next. And before I give you the levels, if you want to learn this art of trading profitably, you should join my mentorship batch. 23rd batch starts on 1st of July. Register yourself now itself. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. Also, you can be part of my signals group where trading as per the signals. Definitely you can benefit. Again, reach out to the same Telegram and email ID for more details. Now let's say where to buy. You can buy here at 1962.5. 1962.5, you can expect 1967, 1972. Remember, the gold has to stay above this zone in order to stay bullish and give a breakout. Beyond 1972, I will expect it to directly land at 1985 levels. And if it stays above 1985, this time we are going to look at 2000 levels, and in fact 2020 can be expected. Hence, we have to wait for 1972 and then 1985 levels to be breached. Remember, these two levels, if are taken, possibility will increase for it to stay bullish for entire next week, and hence one has to stay watchful of these levels. What you can do, you can enter here, keep shifting your stop losses, or keep booking profits here, re-enter, or keep booking 50% and continue or trail the rest. That is how you can do it. Now, where to sell? I will recommend you to sell here at 1953 levels. Below 1953, you can still expect 19. See, very nearby, and my favorite levels are here 1945 and 1940. Very good support exists till there. And if it stays below 1940, then only little more bearishness to prevail, below which till 1932 first support, very good support here, and then 1925. In fact, if it stays below, see, I will expect it to hit 1920, 1915 zone. This is the most important zone which is going to come into picture for gold. Gold below 1932 this time can achieve lower lows at around 1920, 1950 levels. And if it draws below this zone, then further accelerated bearishness can take it till towards 1900, 1870 levels. I will wait for this zone to be breached on the downside 1950, 1920, and only below which further bearishness prevails. Hence, take your trades accordingly. Trade with a stop loss, trade with a trailing stop loss. Do not forget to like, share, subscribe, and comment. Join my mentorship batch, join my signals channel. Reach out to me for any of your trading or training queries. My Telegram and email IDs are mentioned in the channel and video description. Thank you very much. Have a great profitable trading week ahead. Thank you.